Guess I gotta switch the camera. How do I do that? How about there? Looks good. So, good morning. Oh, hey, I found something I'm gonna put on my wall in the office. Is that funny? That goes up on the wall. Oh, oh, oh. I've done a few things, so I gotta put that up. Anyway, say good morning. It's Wednesday, the what? 1st of August? Yeah, Wednesday, August 1st, 2018, daily Forex trading strategy session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but cheer up and stay small, stay humble, focus, and never risk money you cannot afford to lose. My name is Wayne McDonell. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay. We want you to succeed. We really do. It's a symbiotic relationship. The more you succeed, the more you'll trade, the bigger your lot sizes will get, and the more opportunity we have to serve your successful Forex trading business. So even though it might take blood, sweat, and tears for years, I'm here for you, babe. So let's do that together. Do these sessions 7:30 in the morning, Monday through Friday, because it's a couple hours before New York opens. It's approximately London lunch, so it's a great opportunity to get together and realign our satellites for the day. Moving over to the desktop, we have news today. We have ISM manufacturing at 10, which is not as big of a deal as services, so that'll come later. We have another dumb prediction, though. It's Wednesday before non-farm payroll, so we have another dumb prediction, and that is a market mover. So ADP comes out. Comes out at 8:15, and then of course the big news of the day is the Fed meeting at what is it, 2:15, 1:15, 2 o'clock. It comes out they're not going to raise interest rates, but they're going to set the table for more interest rate hikes. By the way, as you know, I've been sick for a week or so. Turns out it's just bronchitis and pneumonia. That's it. So I don't know what most people do when they have bronchitis and pneumonia. I think they maybe don't go to work or wimp out or whatever, but I don't wimp out on you. I've been here every single day, and I'm super happy to. Super happy to work with you every single day. So whether it's earthquakes, tornadoes, flood watches, hurricanes, a few of those, fires, floods. Hey, even pneumonia doesn't keep me away from the screen, hanging out with you. So if I lose my voice from time to time, that's what that is. So I apologize. So let's get through another day. I take everything. That's why I'm superhuman. All right, so let's just hang on. Let's just start where we left off. I guess we'll do crude oil here. Hello. There we go. I think I got it. All right. We started last week, bouncing around through in here, and look at the big plan that we had. Okay. I got to switch this to a 4-hour. Now, the interesting, cool thing about this is this actually doesn't go back to last week. It goes back to a couple of months ago. We set up a potential head and shoulders. So it's now August, and I believe we set this up before I went to Harvard. So I think this was like June. Can anybody confirm that back in June we set up crude oil for a potential head and shoulders? We identified the neck, we identified the peak. We were still up here, so it would have to fall down to the neck, which we identified here. Then it would have to go up to the right shoulder and then down. Two people can confirm. Excuse me. Gee whiz. Two people can confirm. All right. Well, all right. Three. All right. Three people can confirm. Cool. Nonetheless, we were up here, so you can see there was a potential for a double top. And then the idea was it's probably going to drop. Wait, we were way over here. Look at that. And then up and then down. Okay, cool. So long story short, let's go into the smaller time frame. Oh, maybe that's too much. Let's go 30. Let's go. All right. So we had this set up, this whole gray area, which I highlighted last week with this circle. Sorry, ellipse. Never call it an ellipse a circle. It's rude. You know, that we had this as a place where it probably tumble and fall and then head down. Now, the big question though, so that's just technical analysis. So the technical analysis will now tell you it's going to fall all the way down here. Okay, that's true. That could happen. And in fact, if that happens, it'll probably fall even further. That actually predicts from here to here to this to there. But I'm not predicting it's going to drop to $450. But it's a way to predict support and resistance. So at some point, if it comes down into here, that's fine. I still kind of want to buy it up down the road. Okay? I still want to buy it down the road. But it's just interesting that we're able to predict the up, then the down, then the up, and then the down 5 or 6 weeks in advance. That's cool, right? That's the cool part. It's not a magic trick, it's just technical analysis. And what I hope you take away from that is you can predict the markets. Because when I started, everyone told me that you just can't do it. You can't predict the markets. Now when people tell me markets are completely unpredictable, you just can't predict the market, I say that's true, you can't. And half of them get it and half of them don't. But anyways, I think with reasonable accuracy, you can predict the market, at least trade it, right? Okay. So anyways, oil, up, down, up, down. So it could come down for a while. That's cool. That's cool. So how would that impact crude? Now, if oil's falling, you'd expect this to go up. But the funny thing is, we have this set up on 2 time frames. Again, I think we did this a week or 2 ago. But we have a macro move of down, 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 up, up, sell. And then we have the micro move of trapped, bounce, 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 right? Up and then down. So we have the macro up and then down. And then we have the micro, and I just kind of guess off this bottom that it should go up, maybe up into here, and then down. Well, this is, to me, I think, to me, it's pretty reasonably accurate that that we got this. Oops, come on. Okay, that we got this, which to me is very similar to this. And then what was it supposed to do based on the trade plan? It was supposed to fall. Well, it fell. Cool. Cool, right? And that just goes back to what we had planned a week or 2 ago of just simply this as the next move. Cool. You know, and this is still all in play. It's all kind of, okay. And then this is the monthly, and then this is the weekly. Okay. So for bears on this pair, right, one of the things we looked at was this is your sell zone as a weekly swing trade, right? So it's just standard operating procedure to maybe have a sell in here, have a stop up here, and you're done. That's your job for the week. Oh, I'm gone. Tough week. What'd you do all week? Man, I've been shorting that USD CAD at one time. Yo, the best thing about me, the best thing you happen to it. All right, so let's take a look. What's over here? What have we been saying about this? Oh, I know what we've been saying about this. Okay, we had this as a resistance, and then it could fall to a bottom. If it fell to the bottom, it would go to resistance, and if it went to resistance, it would fall to the bottom. If it fell to the bottom, it would go to resistance. And if it got to resistance, it might fall to the bottom. And in fact, I think it was just 24 hours ago in this webinar, we were approaching this level. And I said, you can't assume it's going to break. You should, in a situation like this, you should always take your profit. And if it does break out up in here, it's still going to pull back. And then maybe you have an opportunity to buy the roll reversal if you're so gosh darn bullish, right? But in a situation like this, you're supposed to take your profit and just assume it's going to stay into the range forever. If that's the message you got yesterday, raise your hand and say aye. Well, just type and say aye. To stay conservative, to stay disciplined, to stay focused, just to assume. Aye, aye, aye. That's cool though, right? Look what hope would have got you if you waited. Oh yeah, I remember now. I talked about how some people talk about 3 candle breaks and all these silly little things. Cool, right? That's a pretty significant drop, right? And I think I spent probably 15 minutes on that one specific piece of advice. Okay. Now, now here's the problem. Sometime in the month of August, which it now is, I do expect a break. Gee whiz. I do expect a break sometime in the month of August. So will it do this? That I can't tell you. I just don't know. Because I've waited for this August break, and I had, on some occasions, I had to wait for September. And on election years, you have to wait for November to get the break. That's a lot of patience. Okay. So at some point, you got to prepare. Gold, I don't even have to open gold. I don't know what's going on gold. I think I said yesterday, I still don't know what's going on in gold. I would like it to fall. I can see, well, oh no, most people predict it's going to fall. I can understand why, but I just don't have the technicals really to confirm any of that. And I really just don't know if it's going to go up or down. I think that's the message you've been getting from me. And look what happened yesterday. Holy smokes. It went from peak to valley. It broke out to the downside and then broke out to the upside, and now we're right back in the middle of the range again. That's dangerous, huh? Especially those that chase. I guess that fits into yesterday's conversation now on the other pair, that a lot of people have been taught to trade the break. Because this is an hourly chart, so you can imagine what it looked like on a 15-minute or a 5-minute chart, right? A lot of people have been taught to trade the break, which means they buy on the break or they sell on the break. And that shows you how dangerous that strategy is, and that's why I've never done it. But the scary thing is that's been taught for years. One idiot writes a book, and then some other idiot reads his book and puts that nonsense into his book, and so on and so forth. But very, very dangerous. So I can't squeeze it in there. But I still don't know where gold's going to go. And one thing you could say is on the hourly chart, there's not even a market, is there? Was your 21.55 helping you here? Sending triangle. Absolutely. Okay. Pig dog. Guess we gotta do pig dog. Shooting off my mouth. That's another great thing about me. You're the best thing. All right. All right. If you're a bull, this is your buy zone for the week. Okay. If you are a bear, this is your sell zone for the week. So whether you're a bull or a bear, you've had an opportunity to trade. And we'll zoom in. And everyone should, right? We're right in the middle right at this point. Bulls are buying down here. Bears are selling up here. It's all done. The rest is people chasing price, losing money on small time frames. Or cheeky monkey, you're scalping low and right, scalping high. I suppose that you could be doing that as well. It's a little more dangerous, but that's what scalping's all about. Okay. Gee whiz. Stupid pneumonia. So you have to put all of that in and really figure out what you are. As you can see on a higher time frame, I'd like it to come down a little further or go up a little further. So to me, it's all very mediocre. But you still have your weekly trade basis, so you still have to do that. And also, this would be awesome. The problem is nobody's predicting that, right? Nobody's saying pound's going to go up and the US dollar is going to weaken. Everybody talks about Brexit killing the pound. Everyone talks about the Fed raising interest rates, so the dollar has to get strong. Okay. 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 We'll see what happens. I suppose that's this, when we sort of talk about amateurs buying some dude's book that has silly things in it like how to trade a breakout. And that author couldn't trade, that's why he wrote a book. So then all he did was buy a bunch of other books from people that couldn't trade that put the same nonsense in their book. So he put that nonsense into his book, and all of a sudden everyone is doing the same thing even though it doesn't work. It's perpetuated probably going back to biblical times. It's no different at university. Suddenly you buy a textbook and take a class and they babble on the same nonsense that have been going on for generations, and it's dumb. And nobody stands up and says, "Professor, this is dumb." There's no way that that's true. There's no way that CAPM, that the expected return of a stock is equal to risk-free rate of return minus the beta times the expected return of the market minus the rate of return. You're like, that's dumb. But anyways, I don't know if anyone else is in university right now, but it's funny the stuff they do. All right. Wow. Spent. All right. Let's find the strength. What time is it? It's probably only been 10 minutes. Shoot. We got ADP. Don't let me forget about ADP. Let me go to yo. Oh, so you just learned a CAPM? Yeah. I mean, so Forgiveness says just learn CAPM. All right. So let's say you say to your so you're telling me the value of Facebook is derived by CAPM? Really? That's how you price an equity? It just doesn't even make sense. The funny thing about it is CAPM was designed in the 1940s and 1950s when there was only 30 stocks. Well, your blue chips, right? Your Dow. So you bought, let's say, Coca-Cola. You held it your whole entire life. There wasn't 401ks. People had pensions at their factories because they were factory workers. You bought Coca-Cola and you held it for life. Now, why would you hold it for life? Because you were trying to get the stock to go up? No, because it paid dividends. It was like buying a bond. You bought a bond. If you buy a bond, a few times a year, you get a coupon payment. You put that in your pocket as income. And I don't know, 5, 10, 15, 20 years later, the bond would get your money back. That's what buying a stock was like. Nobody bought a stock because they thought the price would go up. You bought it because now you own part of Coca-Cola and they were going to share in the profits with you. And it was the exact same process as pricing a bond. You could price an equity and you would use CAPM. But nobody says, gee whiz, I'm going to buy Facebook and I'm going to sit on these dividends for the next 30 years and I can calculate the future value of all these cash flow. It's, I don't know. Don't get started. Anyways, let's go back to the beast. So how long ago did we draw this stupid thing here? It's starting to look like crazy important. Wild stuff here, huh? So you have to ask yourself, and by the way, I asked you to ask yourself yesterday to really, and even last week, I asked you, really, you need to spend time focused on what kind of trader you want to be. I want you to focus a lot on your strategy. I want you to focus a lot on your outlook for the next 6 to 12 months for the market. Right? Do you remember me talking about sometime this summer you should have a business planning retreat with yourself and identify what your strategy is, actually write it down so you can explain it to somebody? You should probably have an elevator pitch. Right? Did anybody actually go through that effort to really to walk away from the charts, but then focus on everything else, the business end of being a trader? Like literally identifying your strengths and weaknesses, your opportunities, that's clearly articulating the actual strategy you want to carry out for the next several months, and be able to argue and defend your point of view. Okay. That's what you're supposed to be doing over the summer. If you end up chasing stuff in the future, it's because you don't know what you're doing. Okay? Okay? I hope you've not taken the time to do stuff like that. So, going back to what I asked you yesterday, is I want you to ask yourself and think about and do research and maybe go back and download something from the Bank of Japan's website. Have you even been to the Bank of Japan's website? Imagine trying to tell somebody you're a professional Forex trader, but you've never been to the Bank of Japan website, one of the major currencies. You've never been to the Bank of England website. You've never been to any of the Fed websites. The Fed has, what, 12 or 13 of these websites, right? The St. Louis Fed has an amazing website. Imagine never being to the Bank of Canada. So anyways, I hope, as I offered advice to you yesterday, I hope you've been to the Bank of Japan website and did some research and reviewed what was said and thought about how this may or may not be important, what you may or may not do, and is this fundamentally and technically important? What if it's just nonsense? It could be. The thing is, I'm trying to train you to get in the habit of thinking, not trading like a video game. Does this mean anything? Is it important? Those are the questions that you should be asking, I think, as a professional, right? If you were on your own, managing millions of dollars, you're like, is this important? Is it too early in the cycle? If so, what is likely to happen? Yes. Well, therefore, what it does now should be critically important. Okay. Where did we start the week on this? M2. So on Monday, we already had predicted it would go to R2. This is done. Sets up a potential for a counter trend trade. Doesn't have to, but you can look for evidence of it. Okay. Where are the bears, by the way? There's definitely should be some bears here, but at 148 and 100 pips up, there are more bears. There are bears way up in here. Insert shade groups. There are bears right here, man. Okay, which means let's do it this way. Which means it could do this, couldn't it? And then collapse. Because it's not behaving bearish now, is it? Does it look like it's just going to drop like a ton of bricks? You're like, oh, this looks so bearish. It's crazy how bearish it looks. Well, it's been at this pivot a long time, and it hasn't made a lower low yet, has it? Right? So it really depends. That's what it looks like now. Okay, so I wouldn't aggressively short this. That I don't see an aggressive, or I don't see an obvious respect of where we are. I mean, look, it's supposed to fall here. It doesn't look like it wants to, but what if we get this now? Oops. What if, oops, what if we get this now? So. If you're a bear. What about this? So. Okay. Now, we don't know if this is going to happen, of course. That's why you call it a trade plan. If you were going to look to sell it, right? Oops, come on. If you were going to look to sell it, what would you want to see? Okay. And then if it fell here, does it have to fall for a long period of time? No, not really. Because it might go higher before the drop. Okay. It just gets us up to here, which we've already identified as resistance. Okay, and maybe this just tightens up even further, and then next month it breaks. Because remember, what I'd like on this, right? What I predicted, I think I can say 9 months ago, that the third week of this month, we would have something like this happen. Is it fair to say that I clearly articulated that point of view 9 months ago? Michael says, I wasn't here, but I believe he did. Well, that's more important than anything, right? But yeah. So, but swinging back around to what I'm trying to teach you is that we don't know if it'll do that or when it'll do that. What if this year, the interesting thing is it just takes off early? Then we'd say, well, why did it do that? We'll say, well, we were near support anyways. And on this day, the Bank of Japan changed their policy or didn't change their policy or said something important or didn't say something important that people were waiting for them to say. But what I said is that you need or should go back in time and ask yourself, whatever occurred there, was it important? Yes or no? That would make you a professional if you did the research. What you don't want to see is your price is way up here, right? And all you have to show for that is A, luck, and B, I told you so. But where's you involved in that, right? You need to be the one involved where you're like, hey, man, when you're up here and you want to feel like you earned it, because remember, we have self-sabotage built into our human spirit. It's just what it is. Just that's happens. If somewhere in your psyche you don't believe you deserve this big move, let's say you just crush it, you will find a way deep down inside, this ugly monster will come out and you will lose all your money. Everything you made on the way up, you will lose because deep back here in your brain stem, you're going to feel like you didn't earn it, you didn't deserve it, and you won't be able to do it again and again and again. Just trust me on it. I know you're going to laugh. You're like, this is Wayne's nonsense again. Just trust me. I'm right. I know I'm right. You don't know I'm right, but just trust me, I'm right. So to avoid the situation of self-sabotage, you need to earn it. So even if I'm pushing you toward water or pulling you toward water, right? Go to the Bank of Japan's website, because I'm to avoid self-sabotage later. Go to the Bank of Japan website and you're like, oh my God, it's in Japanese. Really? That's weird. And try to look for the little button that says English. You're like, what? Where do I get the English? And then spend some time like, oh, I found it. And then you go there and then like, what should I be downloading? What am I looking for? What date was this? And start doing your research and poke around. Spend an hour, for crying out loud. You're not doing anything anyways, right? Spend the hour. And then find it and download something. And you're like, oh, aha. That's enough. Because now you can tell yourself, you did deserve it. You do the work. You've been to the Bank of Japan website. You're on your way to being a professional. You know what's going on here. At least you think you know. You don't even have to be right. You just have to think that you know. That's the funny thing about the psychology. You don't have to be right. You just have to think you're right. Remember, everyone at war is the good guy. Right? Everyone at war is doing the noble thing. God is on everyone's side. You just have to think you're right. Okay? Just believe it. Just like, oh my God, I went to the Bank of Japan website and I downloaded the thing and oh, I know what's going on. I deserve it. And boom, you'll be able to repeat this. Okay? So just trust me, man. Just do the work. Go back. And so this is basically what I told you yesterday. And I also nonchalantly said, yeah, 95% of you won't do it. Funny thing is, that's 95% is also the stat of people that don't succeed. So maybe you just do it to just be part of the stat that does do that thing. And off you go, man. Okay? So what happened just a few days ago might be critically important to what happens for the rest of the year. Now check this out. Isn't this funny? Okay. Does anybody remember this setup? I think one of you guys took it, actually. We set this up as a double bottom. One, two, three, hammock. This gets us up here, actually. Beautiful. Huh? Look at this retracement. Look at the roll reversal. Is that sick? Okay, that's sick. Also, by the way, on that particular week, an open here predicts a drop to here. Yeah, really nice. Okay, now an open here predicts a move here. Really nice. Now, the Swiss franc has a negative interest rate. Switzerland will pay you to borrow their money. Has anyone got a Swiss mortgage? Or how close are we to be? Oh, we're close. All right, thank you for the heads up. Yeah, if you had a Swiss mortgage, they'd give you the house and pay you money every month to live in it. You're the best thing about me. Isn't that nice? Now let's zip over to Trade the News. Thank you, TradeTheNews.com. Why are you walking away? Why am I walking away? Okay.
As a reminder, 30 seconds, we'll get the July ADP employment change expected at 186,000.
Here comes another dumb prediction.
ADP employment change comes in 219,000 ahead of expectations.
Fed's going to raise interest
Prior
rates.
month revised to 181 million to 181 million from 177, so revised slightly higher there for June, some 181,000. Recap: a beat on the ADP number, and back month revised slightly higher.
Both of those are good.
Take a look at some of the details. Medium businesses saw 119,000 growth, large businesses plus 24,000. The service sector, another plus 177,000.
What do you think
Small
of that?
businesses saw 21,000 in growth. For the very smallest, overall 52,000. Mark Zandi saying that the job market is booming, impacted by the deficit finance tax cuts and government spending. Tariffs have yet to materially impact the jobs market. This is Mark Zandi.
Did I buy this? No. I hate ADP. Sometimes it's a good scalp, but
No major.
so if you were going to buy it, you have to wait for the roll reversal.
Indicator out of Canada. You
If you-
have 10 minutes past current hour.
Okay. So that would have been it if that's what you wanted to do. Okay. Now the thing is, like a hot headline and an upward revision points to a tighter job market, points to future possible wage growth, and which leads to future inflation, which leads to the Fed raising interest rates higher and higher. So I think a lot of people would actually buy the dollar on this. But the way that this set up as a high volatility event driven strategy, which all of you should know, that's set up as a long. And that's part of scalping that you just kind of have to deal with sometimes. Is it's not what you would expect. It's just what you were given. It's not your fault. You put your stop where you're supposed to put your stop. And if you lose money, you lose money. That's just part of it. Okay. If you're a bear, then you got a little bit trickier of a move. Okay. So now you kind of are going to reverse engineer this. And that's a lot trickier of a move. And I don't think they actually work that way very well. I tend to let it go to the higher resistance level and then look to sell it if I was a bear. But you basically have that. And that's something I've done a lot less. That's not typically what I do. Okay. But if you're a bear, the resistance is high. That's pretty obvious. You can't miss that, right? And then fundamentally, everything else is down. I look at that and like, right? Back in the day, I'd already be up or down 50 pips. I don't know if that's even moved 8 pips. So you're like, seems like gone is the day where you would just pick up an easy 50 pips. All right, but this is the typical move here. Old school way. Yeah. 1740. Yeah. So that's a simple monthly swing, right? So that's where Brook is short. Brook is short there, but that's just a swing trade, right? That's just Brook. That Brook is just, that's that's what you do. Nothing special about that. The only thing special about that is that Brook was ready, had a trade plan, had a bias, did the research on the swing, identified the price and the entry. Probably took it 2 days ago in anticipation of front running August. But that's not a complicated trade, right?
Reminder, we're about 10 minutes to the bottom of the hour, along with some
It's like,
Canadian
what else
data,
would you
the
do
MLI
there?
leading indicator. We're going to get the quarterly refunding announcement.
So I'm not taking away from Brook. I'm just telling everybody else, like, what else were you thinking?
Their issuance, we're looking for 34 billion in 3 years.
Oops. Right? Like, what else were you thinking? There was no other opportunity. What you were going to buy here? Right? So if you're not on trades like that, this is part of the stuff I ask you to do. Stop trading for a little bit. Get off your 15-minute chart a little bit and really start planning out your month. Okay? Plan out your month. What are you going to do in August, right? So that's, I think, how Brook got this, really. I mean, I don't know. I mean, that's an obvious talk. But what, yeah, what would you do the month of August? So as you guys know, I manage a swing trading group. One of the things we talk about several days in advance of the new month is planning out the new month, right? And so I can tell you, it's just boring standard operating procedure that the month would look like this. Okay? From that high to that low, there's just nothing even more to say. It's like reading the ABCs, right? A, B, C, D, E, F. You're like, wow, you got the first 14 in a row correct. And keep going, right? So this is just Brooks did a great job. Good. That's just a swing trade. That's what you do. Good, 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 good. So now you can probably Brooks probably remove the risk. And the worst case scenario now is this skyrockets up, and Brook is knocked out at break even, but has the opportunity for the swing. And what you want over the course of time is more and more and more and more opportunities. You don't know what the reward is, because remember, you're not in control of the direction of the market, and you're not in control of how far it goes in one direction or the other. You're not in control of the velocity. So what are you in control of? Price, time, risk. Okay? Price, time, and risk. So once again, and maybe the month or so I was gone, maybe people get rusty, right? But imagine this. Imagine you only sell euro dollar. That's what you do. All day, every minute of every day. On the weekends, you're sitting around dreaming of selling euro dollar. You're on a sailboat, the sun is setting. They're popping champagne. You're with a beautiful person. And you're thinking about selling the euro dollar. Do you have that kind of focus? The answer is no. Why not? Why don't, right? Bring some clarity to your life. You see what I mean? Like, have some clarity. What do you do? I don't know. Every day I go to my charts and I just wing it. Boo, 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 right? No, what do? I sell euro dollar. Are you going to sell it today? I don't know. I'm looking at the right prices. I like to look for the right setup. But when I find them, I sell. Okay? This is what a portfolio manager does. Okay. If you have that kind of focus, is it possible you would have missed this? I don't think so. I think it'd be impossible. Otherwise, it's negligence. If you had hardcore focus, there's no way you would miss. That is a basic swing trade. And how does that happen, folks, right? Yeah, choose a bias, right? Flip it, but whatever. But that's where you need to get. So don't get mad at me like maybe I'm ruffling your feathers, right? Don't get all pissed off at me. Just take in the message. Do you have a clear set bias written down, but is it also one that you carry with you spiritually? It's monthly. The monthly supersedes the weekly. And by the way, weekly R1 at a quadruple top is resistance. R is resistance. Quad top, it actually is like a pentatop. Okay? It's resistance, 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 price action. It's resistance on a weekly because the R is. Now, it's not a good weekly swing. It just tells you on a weekly basis, we're probably going to move sideways, but on a monthly basis, you're trying to get this down. But you certainly don't buy it at the R, right? The worst case scenario here is it pops up and then it pops. Okay, this is your plan B, guys. If Brooke was wrong on the first one and it did this, let's say it spiked up for a day or two and then came back down, is that really going to screw up your August? You're like, oh, well, there was that one afternoon in August where it went up to the weekly target and then collapsed. Doesn't matter to me. First opportunity is there. Second opportunity is there. Third one will be the next, right? This would be the third. The thing is, if you have clarity in your strategy, in your bias, in what you want to do, right? You would sell here. Or if it went up here, you'd sell here. Or if it went low, high, then you would sell here. But the thing is, you know that you want to sell. So what do you do now? You look for the right price. Like, is this price action resistance? Yes. Is this a monthly pivot? Yes. Is this a weekly pivot? Yes. Is there a psych level in there? No. Is this resistance? Yes. So what is it that you do as a bear on euro dollar, as a specialist, right? I sell a resistance. Where's resistance? Huge one here, huge one there. Now I just need price action, right? So when you get up to these prices, you drop into a 5-minute or a 15-minute. But the thing is, it's quite simplified. What you're doing is probably much more complicated than that. And you might find that your results are very inconsistent. And it's not your trading per se, probably. It's your strategy. It's like one day you're buying, the next day you're selling. You just can't be precise when you're changing all the time, right? So, anyways, Brooke got that, nailed it. That is Brooke's job. Brooke did it perfectly, but at the same time, it's not complicated. So, you know your price. And you know, right, now you just use some basic technical analysis to get in. I don't care what it is, 5A cross, oscillator cross, whatever cross, candlestick pattern. I mean, all of that's the basic stuff, right? You sell there on a drop, or you sell up here on a drop, or you sell the same prices here, but in a different scenario on a drop. So now you know what you're going to do. So I could ask you, what are you going to do the month of August? Well, I'm looking to sell on the bear. So the first thing I notice is way to the left, there's tons of resistance here. I also notice that it's near our weekly R pivot, and August, which would have, this is still July back here, but I also noticed that that's the M3 for August. So I'm going to look to sell somewhere in here if I see anything bearish. I don't see it yet, but if I see anything bearish, oh my God! It's like, there's just no way if you're waiting in the ambush. Okay? It's like you're on a path in the jungle waiting for the enemy to walk by, and it's a parade with a marching band, and you miss it. You're like, yeah, no one walked by. What do you mean nobody walked by? There was a parade. They had a marching band. Oh, I must have missed it. What do you mean you missed it? You can't miss it, right? If you missed it, it's because you weren't there. That is the message I'm trying to get across. You can do this technical analysis. I don't even care what kind of technical analysis. It doesn't matter. What matters is you were there and you were ready. And of course, if it went up, you didn't get a trade. If that's the case, then you're here and you're ready. You're like, if this turns bearish, I'm crushing it. I'm going to crush it if it turns bearish here. And then, of course, if it drops and makes a new lower low lower than this, you're like, oh my God, I'm going to 1, 2, 3. Right? And you're up here now because you're like, all right, I made the lower low. I know how to trade a 1, 2, 3. I know a hammock when I see it. I'm going to wait for a retracement back to this roll reversal. And then if it turns bearish again, I'm going to crush it. Right? You see the difference? And so many people get caught up on they're not trading the right moving averages, they're not using the right oscillators. Maybe an RSI will help. Maybe I'll use the ADX. And maybe I only trade when the ADX crosses over and the MACD crosses over too. And then, like, are you mentally deranged? But that's what they teach traders, don't they? Oh, you're not using the right combination of oscillators, and your moving averages are wrong. You're like, why don't you just sell at resistance? Isn't that the bigger question? So what do you do if you want to sell at resistance? What's the first thing you have to do every day? Identify resistance. Isn't that cool? This changes your whole entire routine, guys. Let's see. This changes your whole routine. What are you going to do today? I'm going to sell $1, baby. Okay, good. Please identify the next three prices that you would consider selling euro dollar. Okay. Does that look like resistance, you guys? We already know. Okay, great. How about there? Or if you don't like that one, how about this? Would you sell up in there? Cool. All right, let's say you're a bull, though. Okay, you're a bull. Great, good, bull, great. Pachow, 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 pachow. All right, so let's call this maybe. Would you consider that support? If you're a bull, you're only allowed to buy. So you're like, yeah, okay. And then what about this one down here? Sure, cool. So now what's the likely outcomes? Okay, if you're a bull, you already missed a spot. You should have caught that last week. If you buy here, you could. If you're late, like I said, you should have bought M2 last week. I believe I even pointed it out. But what if it did this now? Right? Cool. Or, okay, so what would a bear do now? Well, a bear would have already sold this. Okay. Cool. And then if you got up here, we know bears are going to sell that. And of course, if bulls are down here, you know they're going to buy that. Okay. But anyways, what I'm trying to get you to do is think a little bit more. React a lot less. Will you do that for me? So if you were a bull, oops. Okay. If you were a, you could buy it here. The danger is we're still moving sideways, right? You can still take the shot. Just manage your risk. Treat it like a scalp. This is a 4-hour chart. Obviously, you could have put some trade into that. Or you simply wait and say, you know, I stay out of this stuff. And as a bull, I buy the bottom. Okay, and now that it's moving, maybe you can move your stop. Lock in some profit. Or you just move your stop to here. You spend a lot of time waiting in Forex. And the reason you're waiting is you have a plan. The most dangerous thing you can do, and I'll end on this, is you open up your chart in the morning and you start cycling through looking for trades. And the thing is, you'll find one. You'll find lots of trades. They're not hard to find. Okay? Do not open your charts and look for a trade. Open your charts and identify levels of support or resistance and match your buys to them. So if you're a bull, you're looking for support. If you're a bear, you're looking for resistance. So when you open your chart, ask yourself, what are the next, oops, if you're a bear, let's say, what are the next 2 levels of resistance on this chart that you would consider selling? Probably here and here. On this smaller time frame, you could do it. Right? You have permission to consider this. See, somebody's buying this on a smaller time frame. Well, yeah, you'll punish them. In fact, you'll take their money. It's not your fault. You're a wolf, and they're a wounded, sick animal. Okay? And you'd probably consider that. Cool. I just planned your day. You're welcome. So thank you, guys. I'm sorry my bronchitis and pneumonia made my webinars less than perfect, but I'm here every day for you because I care, and you're that important for me, or to me. I roll out of my deathbed for you. So thank you for being a client of TradersWay. If you haven't joined our family, please visit TradersWay.com and open an account. Peace on earth. May the pips be with you. May our profits be above average. You have a wonderful day, and I will see you again tomorrow. Cool. Yeah, thank you. Cheers.